Welcome to this week's ASX strategy session. Thanks for joining me. Great having you with me for another live edition of the show. Plenty to talk about. Lots going on in the stock market and also in the commodity markets. Big movements going on in oil at the moment. We'll go through that, go through gold, copper, uranium, all that as well. And later in the show, any stock codes you want me to have a look at, let's go through those as well. Get the charts up, look at the overall technical structure for those. As always, everything today, general commentary only, doesn't take your personal situation into account. Having been through those important things, let's get into our first chart for this week. And we shall start off, as usual, with the ASX 200. And the ASX 200's extraordinary rally continues. It's up a touch over 20% in the last 9 weeks. So this is one of the fastest recoveries on record. But what should you do now? Do you go with this strength or do you start looking for a top? I'll talk more about that in a moment. There are also some interesting developments in the SP 500. I'll show you an indicator that will probably surprise you, and it certainly surprised me when I caught up with it this week. But before we get to that, let's start with this latest price action in the ASX 200. So prices got to within 0.01% of an all-time high on Wednesday, and that follows this relentless rally off the April low. It's interesting. There haven't been more than 2 down days in a row since the low. That's just how relentless this rally has been, and that includes this brief pause during mid-May. So that just shows how quickly the dips have been bought. I think there's a good chance we see a new all-time high next week, and it's just so close now. And when a market gets so close to like a key marker, it almost like becomes a magnet. And when we look at what's going on in the US market, it's possible we get several new highs. So I'll get to the US market in a moment. So what do we do here? Do we go with this strength, or do we go with this trend, or look for a top? And this is an important decision for anyone managing a portfolio. If you've been watching these strategy sessions over the last few weeks, I've been discussing the potential for a pullback towards the 50-day moving average. And the reason for that is that prices have been stretched. They've been stretched above the 50-day moving average for the last month. And historically, we know that prices ultimately do come back to the moving averages. But of course, that hasn't happened in the ASX 200. It hasn't happened as yet anyway, and the ASX 200 has continued to rally. So do we steadfastly refuse to play, or do we just go with it? And I think the answer is we go with it. We go with what's working. We go with strength. And that's been the approach we've been taking since mid-April, as prices started to rebound. And that's been that gradual move back into the market. And then over the last several weeks, as prices have become stretched above moving averages, it's been taking that more cautious stance towards buying over that last few weeks as prices have become more stretched, but certainly hasn't been getting out of the market. And I think that remains to play here. I don't want to dig my heels in and say the market has to come back or has to do anything. The market doesn't have to do anything. And this is a mistake people make. They get fixated on what the market should do, and they won't budge on their opinions. There's nothing to say a pullback can't happen from higher levels. So it's a case of the market's rallying, go with the rally. I think that's the way to play it. But I also don't want to get ultra bullish and go all in when prices they're clearly elevated above their 50-day moving average. So for me, it's that case of being long stocks, staying long stocks, but for the time being, only considering the best setups for new exposure. I'd really like to see what the next pullback looks like, and we know there will be a pullback at some point. So I'd like to see what that looks like before significant further investment. There's been a scramble back into stocks over the last few weeks. The I think the next thing to watch for is buying of the dip once this scramble ends. So once the scramble back into stocks finishes and prices pull back, what does that pullback look like? Is that well supported and holding above the moving averages, and does that set up a platform for further advance? Time will tell. We need to see what that happens when it occurs. Overall, I think the structure here is positive, and that's why I'm happy to generally be long stocks. We've got these moving averages, they're rising, prices are now well established above the moving averages. Every bullish phase is associated with prices being above rising moving averages, so that's a positive backdrop. And then there's the broad participation. We've seen strength across the ASX. So it's not just the big caps, it's not just CBA or the banks rallying, it's the mid caps, the small caps. And that broad participation is typically associated with a healthy market. So I just quickly jump over to the equal weight, the ASX 200 on an equal weight basis. Just a quick look at this. This is a great measure of participation, and it's a great measure because it ranks the top 200 stocks, of course, equally. And what's, I think, positive here is that the ASX 200 on an equal weight basis, it's keeping up with the ASX 200. So from that, we know that the strength is broad-based. It's not just a few big caps pulling the market higher. Keep an eye on these series of previous highs from February and then also late last year. And we just compress this. It also takes in the high from 2022. So quite a technically active region just above the market. I think this is another reason just not to chase stocks that have run a long way as the market is, after a big run, approaching these key levels. Yes, I think be long stocks. I think go with the trend, go with what's working, but be selective with new exposure while stocks are stretched above the 50-day moving average and also just below a notable resistance point. Just coming back to the ASX 200 to finish this section up, for me, really, it's all about balancing risk. So yes, the market's rising, and I'm not going to argue with that. I'm happy to stay invested and hold what's working, and I'm also happy to selectively buy stocks with good setups. But I also know that the ASX 200, it has come a long way in a short space of time. There's nothing to say it can't go further, but historically it usually pauses. So just keeping that in mind from that perspective, I'm not rushing to keep adding exposure. I think the next pullback will tell us a lot and potentially provide the setting for the next round of opportunities. Okay, so we're going to jump over to the US market and have a look at that next. First of all, if you're getting some value, please hit that like button. Please leave a short comment. Just, hey, thanks for the video, or tell me what you think is going on in the markets. Should we be looking for a top, or should we stay with the trend? What do you think? Let me know in the comments below. All right, SP 500. Let's go over to that. So this has been a relatively quiet week for the US stocks, but their resilience to any potential negatives, I think it shows the underlying tone remains bullish. On Wednesday, prices hit their highest levels since the breakdown back on the 21st of February, and now they're only 1.5%, about 1.5% below their all-time high. What's been surprising is that there's been buying on even the shallowest of dips. So from the April low, just look at the dips since the April low, and you'll see they're all like they just last a sometimes a day or two, and then prices keep moving higher. And I think I think that means that there's, well, because the dips have been so brief and so shallow, it's meant that there hasn't been a chance for a longer consolidation to kick in. So we haven't had that pause, that lengthier consolidation, because the dips are so quickly bought. Now compare that to the just another V-shaped recovery, the infamous COVID period. Just looking at like how the recovery played out here, there are two multi-week pauses. As you can see, multi-week pause one, multi-week pause two, as prices become re-established above the moving averages. So it's interesting to see like how this period played out, and we see this sort of price action in other times as well. Coming back to current day, that's not been the case here. We haven't had those pauses. It's been very brief pullbacks indeed. So there's been that persistent buying on down days. And I think this is important, as it shows that buyers they're just quick to buy the dip, and it's not a case of sellers rushing in to sell the rally. So very important distinction between when something's working and when it's not. When it's working, the buyers are ready to get in. When it's a bear market rally, the sellers are quick to want to get out. That's not what we're seeing in this current structure. So I think that's a key underpinning of any bullish market. Quickly looking at the equal weight for the S&P 500, and this shows there has been more consolidation over the last say 4 weeks, but it does look like it's been a healthy consolidation. And it's healthy, I think, because prices continue to find support around the moving averages. The other important development is that the moving averages have now crossed. So you can just see in here the 50-day has moved above the 100-day. So the 50 being the red and the 100-day being the blue. And it's when the shorter term moving average is above the longer term average that you have the conditions for an ongoing upward trend. Doesn't mean that you'll get an ongoing upward trend, but the conditions are in place. And I think the fact that we're seeing this in the equal weight is positive, because the equal weight is again, it's that measure of participation. And if there's broad participation, then I think the rally is on firmer footing. Just on participation, I just want to show you one more indicator. I'm just going to jump back to the S&P 500 and have a look at this. I'm going to put on an advanced decline indicator. And so I think this is interesting. So what an advanced decline indicator does, it takes the number of stocks that rise, and then takes the number of stocks that have sold, and you get the difference between the two. And this is a cumulative. And then so the number that rise, the number that sold, take the difference and add it to whatever the number was of the previous day. So you get this cumulative advanced decline line. And what I think is so interesting with this is that the advanced decline is hitting new highs. Just this week, the advanced decline hit a new high. So why is this important? Well, it's another measure of broad participation. And so this isn't a rally driven by Nvidia and Microsoft or Apple or any of those big stocks. Of course, they're contributing, but it's not solely about them or mostly about them. It's when the advanced decline isn't making new highs and the market is, that I'd be concerned. So if the market were making new highs and the advanced decline was still struggling, and that's when you say, well, look, this is a big cap rally. It's a mega stock rally. The rank and file aren't participating. But because the advanced decline is hitting new highs, it's hitting new highs before the actual index. So I think that's an underlying supportive factor for the rally. I'm continuing to play this from the long side. The price action to me suggests that the interest is in buying the pullbacks at this point, not selling the rallies. But like I say with the ASX 200, I'm not rushing to keep adding exposure as prices relentlessly move higher. I think it's a case of going with what's working, and then managing risk with trailing stops. Always having that exit point, because things do invariably change at some point. Okay, so I'm going to move over to the small caps next, with the US small caps, the Aussie small caps, the commodities, talk about what's going on in oil. And but that, of course, wraps up the free section. So, nice strategy session. Remember, there's a link below. Click that. Come on in. You'll get the full replay plus next week's live. You can ask me about stocks that you're thinking about. We can generally discuss those. And it doesn't cost you very much at all for what you're going to get. So think about doing that. All right, so let's go over to let's start with gold.